morning. Welcome to IG's early morning call. It's Wednesday, 7th of February. Let's take a look at the headlines as we wait to what looks like a stronger start to the European equity markets on this midweek trading session. German DAX record high, above 17,000 yesterday, closed for the first time, and we're building on that in today's session on the 24-hour markets on the IG platform. Meanwhile, the UK house sector is in view. We've got a couple of bits of breaking news headlines that Barratt Developments is to buy Redrow for £2.5 billion, plus the fact both have come through with first half numbers, and they both say the market is fragile and things not looking particularly good. All this comes as well as the Halifax house price index comes up for the fourth straight month, showing that bricks and mortar is still profitable. US earnings, Snap, down 30% yesterday as a result of the company producing revenues far short of expectations, certainly against estimates coming through from other companies that use ad revenue such as Meta, Google, etc. Meanwhile, Walt Disney and Uber Technologies, two all-session stocks expected to report after the bell this evening. Let's take a look at volatility, down for a third day. And this goes some way to explain what's happening across the European markets. I want to show you this first of all. This is the German DAX. As we speak, a new all-time record high. An entire candle above the 17,000 level as well. Yesterday, we closed in the 24-hour markets and the cash session beyond 17,000 for the first time ever. And you can see this market continues to build, despite the fact that we have poor economic data. I'll cover that in just a minute, but we've seen German factory orders out this morning not looking particularly pretty. London markets, let me just quickly check on the 30-minute candle chart just to give you some updated news on where we are. On from the close of the markets last night, which was this candle here, we are just above the waterline as of the close on the cash session last night, but it is only just a couple of points earlier. I was tweeting about this and I was talking about a stronger start in the London markets, but now that's not looking the case, that we see a little bit of a move down on the session in today's trade. And that's developed into this one-day candle here where you can see that spike up on the upside, the longer wick on the upside, taking us to levels initially not seen since the 9th of January. Then came this little bit of a sell-off that we've got. And I'm now wondering whether perhaps maybe we might end up actually having to look at a possible negative start in the London markets. French markets holding on pretty much to the strong candle that we saw in yesterday's session. Let's take a look at what's been happening overnight in the Asia-Pacific markets, where we've seen some breaking news out overnight coming through from Ford Motor, which was up 10% on the session. That's helped Toyota deliver to a record high today. Toyota also taking the stock up as a result of some positive news coming through from Honda, and Kia, suggesting that the hybrid market is doing particularly well. We'll see from Ford in just a minute that the electric vehicle market is a bit of a cash drain at the moment. Anyway, Nikkei 225, when all was said and done, closing down 0.1% in a mixed session in today's trade. Hang Seng stock index, after performing excellently over the last couple of days, eating back into some of those gains with a drop of around about 0.25% when last looked. S&P ASX 200 up 0.5% almost as at the close in today's session. Let's wind the clock back even further and take a look at what happened late last night on Wall Street before we saw earnings coming out late last night from Snap and Ford, which really stole the headlines. Gains across the board on the US markets, and a quick snapshot of where we are on the 24-hour markets, despite that rise of 0.07% on the NASDAQ composite. Let's take a look at the NASDAQ Tech 100 on the IG platform. Late in yesterday's session, we saw a drop. And we've got a build up on that at the moment with the red candle there for the NASDAQ, despite the fact we saw that market moving towards record highs in yesterday's session. Dow holding on to the gains we saw in yesterday's trade, and the S&P 500, after what was a positive session in yesterday's trade, a small red candle at the moment. The bottom line is that we continue to trade very close to these record highs. I want to go back into that German number and take a look at what's been happening, as I said, in the economy, because we've seen some industrial production numbers out, not factory orders, I beg your pardon, falling more than anticipated by 1.6% in December month on month. Expectations have been for a drop of 0.4%. So that is not looking particularly good. And as I said, it comes as we see that DAX rising to record highs. Let me just take a look as well at what's been happening with the Halifax house price index, because that's just breaking news as well that we've come through, which actually looks particularly strong. Remember, the nationwide came out last week with a rise of 0.7% for a rise month on month in January. Expectations have been for something like that from the Halifax, and in fact, it came through with a 1.3% rise. And that is, I think, stunning, really, when you consider the situation. Year on year, up 2.5%, up from 1.8% last time out. So it's showing a stronger market. And the big question is why? It's because not that many houses are coming onto the market. I think that's what the message is from estate agents. They are running difficult markets because they don't have the throughput. But the bottom line is it's because people are not putting their houses on the market to sell. It means that house prices are maintaining a relatively high level. I want to show you this chart here. This is the household and goods and home construction index. This has been rising recently, and I wonder whether perhaps maybe we could see a little bit of a gain at the start of today's session in this particular sector. Now, two component parts of that sector are Barratt Developments and Redrow. Both have come out with first half earnings this morning. But I think for me, the big headline to come out of this is that Barrett and Redrow have agreed an all-share cash deal to bring the two businesses together. Effectively, it means a takeover by Barrett of Redrow. The price is just over £2.5 billion. Shareholders will receive 1.44 Barrett shares for each Redrow shares, meaning that Barrett is the major partner in this merger. But at the same time, we've seen Barratt Development on first half adjusted pre-tax profit, £157 million. Last year, that figure was 521 million. It's come through with a dividend up at 4.4 pence. Last year, that was 10.2 pence. This is a company where we're seeing net cash stripped out of the balance sheet. It's still got 750 million of net cash. Last year, that was 960. But to be fair, that's after it paid a final dividend of 228 million last year. So even that dividend wasn't as high as the previous year. But you get the picture that we've seen this drawdown in value in the sector. I want to show you the Barratt Development chart. You also see some news coming through as well from Redrow. I wonder whether perhaps maybe we'll get some sort of short position here winning out in today's session. If you go short at 530 pence, your stop goes above this area up here, which would be above recent sort of price action, around about the 540 pence level, above the 50-period moving average. And we've got an area of support down here with the 100 and 200 period moving average down at 471 pence a share. I want to show you the Redrow share price. Now, this deal is at £6 a share. It closed out at 603 yesterday when the market settled out. And Redrow has come through with revenues in the first half down to 275 million from 756 million. It says due to the subdued housing market. Both Redrow and Barrett saying it's difficult conditions out there at the moment. Profit before tax, 84 million. That was down from 198 million. Interim dividends coming through 5 pence in line with policy, down from 10 pence last year. Again, this is not looking particularly good, but this stock will come off the market as of today when they get full shareholder approval on that recommended deal in the sector for Barrett to buy Redrow. So another company out of the London markets. Let's move into oil. Let's move into the French markets, and let's take a look at what's been happening this morning with TotalEnergies coming through with earnings. Adjusted income falling to 5.2 billion in the fourth quarter, down 31% compared to the same period this time last year, mainly due to lower oil prices and a drop in refining margins. Adjusted EBITDA coming through at $11.7 billion, down 27%. Fully net income down 36%. To 23.2 billion. It is proposing a dividend up 7%, 7.1% to just over €3 per share. Like a lot of these companies, we're trading off the highs for these oil businesses, despite a robust market. That being said, that high that we've seen at 64.80 recently, when was that? That was the 2nd of November. So we're trading off the highs. Yesterday was a particularly strong day at 60.32. Interesting to see where TotalEnergies starts today's session. Ford Motor saw shares jump all sessions on the IG platform late last night after the close to a 6-month high after better than expected earnings. Let's take a look at the numbers that we saw coming through from Ford. Earnings per share coming at 29 cents. Analysts looking at 12 cents a share. Revenue also beating forecasts by nearly $3 billion, reaching 46 billion. The carmaker said it would return more cash as well to shareholders in the first quarter and will start with an extra 18 cents a share on its dividend for the period. Ford forecast 10 billion to 12 billion in pre-tax profit for 2024 after earning 10.4 billion before taxes last year. Let's take a look at the share price chart. A stunning performance yesterday. We're off the highs. In fact, we were, as I said, at one point at 6-month highs in yesterday's session, closing out at 12.82. The company did warn, though, that electric vehicle operations were a money pit in 2023 for Ford. Said it will continue to be a cash drain this year. Its Model E lost an average of more than $47,000 per vehicle in the fourth quarter. That is massive. Ford has decided to slow investment in new EV capacity to match slower demand. It added next generation of Ford EVs will be launched only when they can be profitable. All this news coming out since we had the news overnight from Toyota suggesting that the hybrid market is where the big money is to be made. You can see here the share price chart ending at 12.82. It'll open at 9 o'clock this morning, all sessions on the IG platform. Snap's shares, I'll start that again. Snap shares gain over the last 3 months has been whittled away in one night's trade last night with a whopping 30% loss in shares after it unveiled its quarterly earnings. Let's take a look at the numbers. Snap posting a loss per share of 15 cents, marginally better than the 17 cents loss anticipated, but revenues missing expectations, confirming concerns that Snap is struggling to compete against its much larger rivals. As a comparison, Meta's advertising sales surged 25% in the December quarter, Google's ad business growing 11%, and YouTube up 16%. Snap's was just a 5% gain. In yesterday's statement, Snap said it will focus this year on increasing Snapchat's user base and investing in markets where the tech company earns the most money, including North America and Europe. A quick look at where we were on the share price chart as at the close last night. You can see, as I say, in one candle, we've seen an eradication of all the last 3 months' share price gains that we've seen, resting at the 200-day moving average at 11.47. Snap will also lay off 10% of its staff to invest incrementally in the company's growth over time, according to the statement. Let's take a look now at some of what we've got in terms of market moves today, potentially. We've got Alibaba out with earnings before the bell today. Wall Street expects it to earn $2.67 per share, down from last year's $2.79 on revenues of $36.7 billion. That revenue line will be an improvement of $1.9 billion over the previous year. The problem is that the Chinese authorities have been heavily involved in the business ever since it became obvious that Alibaba knew more about Chinese citizens living in the country than the state did. And that was one of the reasons, I think, as to why the Chinese authorities came in and took Jack Ma's business away from him. I want to show you the share price chart. It's really done quite well in the last couple of weeks or so. Its stock has fallen to 34% over the past year compared to a 20% rise in the S&P 500. Stock is down 6% year to date, including 30% over the past 6 months. That being said, we've got a rise here recently, up from 66.40 to 79.12. That gain has been fueled in part by what's believed to be a softer regulatory and macro environment in China that can improve the company's growth trajectory. So that's expectations. That was a Maribuzu candle yesterday. No sellers at the close at 79.12. This stock is all sessions on the IG platform. It'll open at 9 o'clock, and the shares will doubtless respond to earnings out before bell today. Now, after the bell tonight, the entertainment giant Walt Disney comes through with its latest quarterly numbers for the fiscal first quarter figures. Let's take a look at what's expected from the company. It's looking to have earned $1 per share, mirroring the 99 cents achieved this time last year. Revenue forecast suggesting a modest year-on-year increase for the same quarter, with projections around $23.75 billion. Analysts anticipating growth across all three segments: entertainment, experience, and sports. And the company is expected to continue to see a share price benefit if it comes through with these good figures. Let's take a look at the share price chart. In the last 3 months, it's been rather eventful for Disney. It resolved a strike with writers at the quarter's start and then reached an agreement with the Actors Union on pay. It announced a deal with Comcast as well for the full acquisition of Hulu. Recently initiated a potential merger with Reliance Industries of their media business in India. Investors keen as well for more details on all these developments. But as of yesterday's high point, we were trading at levels not seen in this market since May last year. So the stock reacting to all of the potential positives we've seen. The big question is just how much perfection has been priced in at the moment at 98.25. And I wouldn't mind betting that Disney's going to have to beat by some margin if it's going to get any more upside to this stock price. Meanwhile, the ride-hail company Uber Technologies also out after the bell this evening. That's for its fiscal fourth quarter figures. Forecasts are for 39 cents a share, up 17% year on year. A 5% increase in revenues to $9.75 billion. Uber aims to recover from a previous revenue dip while sustaining a 30% gross margin. I want to show you the share price on what's been happening with Uber, because it's one of these companies that is in a very difficult market in as much as it has very high costs for marketing. But nonetheless, the company has managed to increase margins. And as a result of that, Uber has really been racing away recently. In fact, if I give you the full picture going all the way back from its initiation at $45 a share, you can see this is a record high at 70.62. It's an all-session stock. You can trade this after the close tonight when it produces those earnings. Another all-session stock is that of PayPal, another company to come through after the bell this evening with its latest quarterly. Earnings per share forecast for 1.36% per share. Response to the figures suggesting a growth of 9.7% year over year, on a near 7% climb in revenues to 7.9 billion. Now, with the growing adoption of the company's credit business, its buy now, pay later solution is anticipated to have contributed well. I want to show you the share price chart for PayPal. As I said, it's all sessions on the IG platform. We're getting to a little bit of an interesting symmetrical triangle pattern here, which I'll draw, and I'll show you where the pinnacle is. We've got to get a breakout at the end here, which is, what's that? It's the date is the 13th of February. Be interesting to see what we get in production of the numbers here. If you get a breakout of a symmetrical triangle, you measure the height of the triangle and you copy that either one way or the other. Let me just quickly give you some sort of potential breakout. There's one side of it, and there would be the other side if you get a breakout on the downside. Let's say the numbers out tonight are good, with a strong monetization of its payments wallet expected as well to have continued to benefit from the company. If we get a continuation of that trade, we then potentially get an upside, which will take us back to levels not seen since the 2nd of August. If you get a break on the downside of this, you're then looking back to levels not seen since the 14th of November, down at 53.86. It all depends on whether or not the company is able to produce some strong figures out of tonight's release. Now, let's take a look at what's been happening on the oil price. I want to go first of all with what we saw on API yesterday. The American Petroleum Institute releasing numbers showing that oil stocks rose by 674,000 barrels last week. Gasoline stocks up. Distillates, though, falling. But I think more importantly for me, insofar as what's been happening with the price of oil, and I'll show you what's been going on recently. Yesterday, the EIA cut its forecast for 2024 domestic oil growth by 120,000 barrels a day to 270,000 barrels, contrasting with last year's output increase of 1 million. It previously projected that crude production would rise this year by 290,000 barrels of oil per day, and that is not good enough. And you can see here the big loss in the price of oil that we've seen recently, and it's no wonder that people think that there is a risk to the downside. We're currently trading on WTI at 73.29, just below the $79 level on Brent. So that's where things stand there at the moment. Staying on the charts, just want to update you as well on a couple of other areas. Yesterday, we saw a drop in the dollar basket. I'll show you the dollar basket first of all, because I think that was an interesting move that we saw in yesterday's trade, just resting back into some of the gains that we've seen. That loss in the dollar has given a little bit of an uplift to some of these dollar-denominated commodities, including gold. Gold up on the session at 20.34. Nickel as well, an interesting one to follow. This is the long-term chart. This massive great big spike here really does make it difficult to read this chart. But look at what's been happened. Look at what's happened over the last couple of days. We've dipped below this previous line of support that we've had, and indeed in today's trade we've pierced it again. But we're now resting just above that. Now, that takes us back to levels not seen since November 2020 on the price of nickel. The news there is coming through from Reuters is that China's net imports of refined nickel fell to a near-decade low in 2023. China's call on Class 1 high-purity nickel, according to Reuters, has been waning now for many months as the country ramps up imports of other forms of the metal from Indonesia. And it's no wonder that the price of nickel on the LME is dropping, because with this drop in demand, China is now looking to source its nickel from other areas. The Indonesian material has traditionally been nickel pig iron, which is a far less refined product. It's a product that needs more refining, but nonetheless it's cheaper coming in through the factory gate. So nickel in today's session scoring new lows not seen since November 2021. Just want to talk a little bit more about one other area, something I didn't cover, and hopefully you're still with me because I wanted to take a look at what's happening with the euro-dollar trade. I was talking about this yesterday in Beat the Street, and this area of support down here, we did technically see a new lower low, taking us back to levels not seen since the 14th of November, but then came a recovery on that weaker US dollar, second day in a row up today. We don't really have much economic data coming through in the next few days to steer this trade. So I think at the moment it is just a retracement in what is ultimately going to be more dollar strength, which will result in a trade below this 107.24 at some point in the next few days. And then it would take us then down to levels not seen since November. At the moment, a little bit of gains, a little bit of a gain for the euro against that weaker US dollar. That's it, 10 minutes to go before the start of today's US trade. I think today's UK trade and across Europe, I think the big news out today is coming through from the house building sector that things are going tough. Barratt and Redrow both saying this in today's half-year results, and both coming through with a merger, trying to bring about synergies and cost cuts in what is a sector very much under pressure. I suspect we could well see some declines in some of these house building stocks in today's session, despite the fact we saw an uplift in the price of a house on the Halifax house price index. Outside of that, watching as well for any reaction to the markets today from the likes of TotalEnergies. I'll be back at 10:30 with Serge Berger for trading the markets or charting the markets at the live on the IG platform at 10:30 a.m. UK time.